Our next presenter is going from clicks to capital, and how do we use digital marketing to enhance our business to raise more money? If you're like me, maybe you thought, hey, I'll just launch a raise and I'm sure all that money will come right in. Or sometimes you see people and they're doing Instagram ads or doing Facebook ads. You think, should I build a social media following? Should I start doing YouTube? Maybe I should get famous on real estate Twitter. Maybe that'll fix that problem for me. What type of digital infrastructure do I need? Should I hire a whole bunch of Gen Zs to run a TikTok account for me? Or what does the back end of all of that stuff mean for my business? Is that going to be pricey? Is it going to actually drive results? Our next presenter has got several businesses in this digitally native real estate space. And I'd like you to welcome, please give me a big round of applause for Joe Giudi.
Said it yet, but we can't really see you. I was going to say nice to see you, but I can't see you. Thanks for the introduction. Some of you may have seen me switching hats frequently out at the Genrev Scale AR and Invest Clearly booth. As Garrett mentioned, run a few companies focused around both the investor journey, capital raising from the perspective of the investor journey, LP journey, and capital raising from the perspective of the GP journey. So when they asked me to speak about kind of that concept, like how can we raise more, what strategies can we use to raise more in 2025, started looking across our ecosystem and looking at the operators we work with and really asking myself the question, like, where do they struggle? And obviously you need more leads. We can accept that, right? Everybody wants more leads in 2025. Is that, anybody in here not want leads? Okay, wrong spot. I guess I should. Of course you need leads. Leads are the gas that your capital raising engine runs on if you're trying to scale, right? Not if you're raising money from your existing audience, but assuming you need to grow, you need to get outside of your existing audience, your referral networks are slowing down, then you need leads. Show of hands, again, I won't be able to see them, so you don't have to raise them, but like leads are a solvable problem. There are providers here, we're one of them naturally, but there's others who can get you leads. What we really have found is that it's what happens after the lead comes in that GPs need to work on in order to make their capital raising more effective. You probably know this, and again, you don't have to share your hands, but how many of you have a process, have really like nailed down the process where someone clicks on one of your ads or one of your LinkedIn posts and they go directly to wiring money to your account? Anybody nailed that? Because you can replace me on stage if you've got it. 25% pref paid daily. Sign here now. That's about what you need for that, right? No one does, right? Because that's not how this works. Like, this is a people business. The investor, the LP, is going through a journey when they click on that ad. The leads indicate intent, but they don't create momentum, right? Like, they have interest. They wouldn't have signed up if they didn't. They have better things to do than click on ads and go to meetings that aren't aligned with their objectives. You need process to turn that intent and interest into momentum in your pipeline. So we're going to talk a little bit about that today, but to continue punctuating the point about leads, when you're bringing an investor or potential investor into your ecosystem, the lead is you can see the line there. Lead generation is really just the awareness phase. Every other thing that happens in their journey happens after lead generation. This is obvious, right? And they go through undulations. Like, there are multiple things that are going to happen. Their temperature goes up and down through the process, and you really have to go through. And you guys, by the way, you're going to get the slides, so you can take pictures if you'd like, but you are going to get them, I believe. We'll make sure you get them. It's your job to make sure that you are understanding what their goals are, how your offer aligns to those goals, and to move them through those undulations so that ultimately they invest with you if it makes sense for them and for you. We're not going to talk about exit and reinvestment, but that's like a whole nother talk that we could talk about. What we're going to talk about now, actually, we'll go through this one first. So through those undulations, there are inflection points that you can optimize. And again, this is more marketing speak here, but they enter the funnel. but do they book a meeting? So by funnel, we mean lead funnel. So they finally click, they're in your database. Do they actually book a meeting? There's a place where you can optimize. First call happens. Do they commit to next steps? Do you even have a process for trying to get them to commit to next steps? And I'm not saying next steps like sign into our portal. A lot of GPs are losing people there. Next steps like in their evaluation process. They say they're interested. Oh, well, there you go. I had it there. They say they're interested. Do they log into the portal? Well, I mean, there's probably a few steps between logging into the portal and their first call. They verbally commit, but do they wire? Interestingly, so the dynamic of generating leads in capital raising is very B2C, but the dynamics in the actual capital raise are very B2B or solution sale. So you may have experienced this or know it intuitively, but about 10% of deals drop out, like industry, not just our industry, but just in general in a sales process, after they verbally commit. So like, does your process with the prospective LP go past that? That's something you want to be thinking about. You can either accelerate by optimizing inflection points, or if you're not paying attention to them, they can kill your momentum. We're going to talk through 4 fairly concrete things that you can do, and like kind of reasons that this is the case. The first thing that we're advising people to do is act quickly, right? You may or may not have noticed there is significantly more competition in this space than there was even 2 or 3 years ago. Not only are there more operators, there are more fund managers. All of those people are vying for attention. All of you are vying for attention. And leads, prospective LPs coming in as leads, are not just looking at you. They're looking at others. So speed matters here. When we analyze databases, just 10 customer databases, right? So that's a very small subset of the overall marketplace. For leads that existed in multiple databases, we found that there was a 31% overlap in just 10 databases. So they exist in at least one more. If you expand that to all of you here and all of you not here, you would imagine that that number is going to go up to 60, 70, 80%. And when you realize that only about 10 to 15 or 25% if you're using like a really good, if you're really well aligned on the setting side, are going to book a meeting, the majority of the people that are actually interested, like that 31% overlap, those are your best prospects. Those are the best prospective LPs because they're actually engaged in the process of looking for sponsors to work with. The next point is average times between first and second submission is 34 days. Is actually really misleading. I would say it's an interesting number because that's probably about what your average kind of evaluation cycle is. But if you drill down into the data, it gets even more interesting. So why speed matters? Well, 31% of the leads exist in multiple databases, and most of those leads came in the same day. So someone clicked on your ad, your LinkedIn post, went to your webinar, they came in, you didn't call them. Okay, great. They didn't get onto your calendar, you didn't call them, you haven't touched them in 4 days. The other GP that they got into or capital raiser that they entered their system did call them that day, and they've actually already had a meeting before you even reach out. Potentially, right? It's not concrete, but you need to be aware that that's happening. 70% enter in the first 30 days. So just an incredible amount of competition and noise in your process. I think the question I'm asking is how many are asking, hey, are you evaluating anyone else? It's great that we're here. How did we get here? What are you trying to accomplish? And are you talking to anyone else about this? It's good for you to know that. So act quickly, maybe ask that question. That's not that one's for free. It's not even on the slide. Next thing, have a defined and measurable process. So you've booked a meeting, a lead's coming to your system, you've booked the meeting with them. What happens now? And one of the things that we're seeing is there's so much focus on lead gen, and then the next step of getting them to the meeting, that there's not a ton of thought given to the process down through the funnel. I started my career building sales process and executing sales process, both in kind of tech startups and then a large Fortune 500. One thing that moved the needle in leading people and myself, right, both as an individual contributor and as a leader, was defining every step and executing consistently through the funnel so that I could measure every inflection point. Okay, we've got the marketing. The marketing stuff sits up front. We've got the leads in. We know what our lead cost is. We can pretty reliably get them to a meeting. We know what that percentage is. Now we're into the people process. That's harder, right? And to get there, especially if you've got multiple people having conversations with your prospective LPs, you really need to have frameworks aligned to discovery, as I was saying before. Do you understand why they're even there? Do you know what their goals and motivations are? Are you preparing in that initial conversation so that you can frame the offer in a way that makes sense to them? And so you don't end up talking about numbers the whole time when they're really just like a narrative-driven person. So measuring that inflection point from discovery to offer alignment, and offer alignment to value confirmation. Again, we made up these sales stages, and we will give you the slides. You might call your stages something else, but ultimately the point here is you want to have some defined sales stages that tell you what you're supposed to be doing and what you're supposed to be gleaning from the LP, not logged into the portal, not signed to the docs. Those don't tell you anything. They don't tell you anything about the person. They don't tell you anything about the process that you're going to have to go through in order to move that person from consideration through to committed investor. If you're running a team, each of these middle inflection points becomes really, really important for coaching. It also becomes it's your best source of market information. Okay, we just launched this offer. We think it's really going to appeal to this type of person. We're starting to book calls with them, and none of them are moving from discovery or in offer alignment to value confirmation, or not. A very low percentage of them moving from value confirmation to verbal commitment. What do we need to change in the way we're presenting the offer, because we know there's value here, in order to help people understand better? So that's one thing on the coaching side. On the business operations side, when you're thinking about scaling spend or investing time into lead generation, you kind of need to know what you're going to get out of it. And again, this is not. There's art and science here, and it's if you're executing a process consistently, you will get to some level of predictability on what spend turns into down funnel. The overall, what I would call discovery to close ratio, is the most valuable leadership indicator in figuring out, like, okay, I need to raise $3 million in the next X months. I know that based on 6 months of historical data, if I put this many intro calls on the calendar and I walk them through this process, I'm going to come out with X. And we're not talking lead to conversion here, or lead to funded. We're talking discovery to funded, actual meetings on the calendar, because this is a people process, and it needs to be executed by people, right? And there's a lot of things that you're going to have to manage inside of those conversations that aren't revealed in kind of like high-level marketing data. So I want to punctuate and pause on that point for a second here. We could spend. Am I not even showing this slide? I'm not showing this slide. Unbelievable. Sorry, I can see it. You can't. So we could spend 3 days on this slide. Just said a lot about it. We could rewind maybe. We could spend a long time. Like this is a body of work for you to do inside of your business to understand, like, do I understand how to move someone through the process, and am I actively executing that? When I talk about the value prop of my deal and my firm, does my team talk about it in the same way? When we use words, do we all mean the same thing? That's the only way to get to something that's measurable when we're talking about qualitative analysis. And to figure out, what you're doing wrong, where you can get better, or where your team can get better. And there's a conversation there about kind of like who's on the bus, obviously, at that point. Here's what I want to say. This is going to feel controversial. I don't know why it feels controversial, so hold on to your hats. AI can't solve this problem for you. Like, I hear a lot about automation in AI. I hear a lot about putting your capital raise kind of like, into that, hey, this is happening automatically. Not going to happen. This is a people business. It is a people-driven process. I think you're all realizing, like, it's hard right now. It's probably harder than it's been in the past, 5 years. But people make the difference here. And to prove the point, we did a little analysis among our customers, some of our customers. We looked at high performers and low performers. I will advance the slides this time. Okay. And we looked at, like, what are they doing? What are they doing net of automations? Not, how many emails are they getting from HubSpot? Not like what are the texts they're getting set out automatically, but what are they doing net of automations that's making a difference? It's not surprising, but it is also at the same time a little shocking because I didn't expect it to be this dramatic. So when we analyzed what top performers versus low performers were doing, again, non-automated, human-driven touches, we're going to go ahead and call this like the persistence quotient, right? Are they engaged? Are they actively trying to connect with this LP? And are they moving the needle? Like, look at the numbers. 150% more, well, it's actually 120% more touches on overall. You've got roughly 150% more meetings, infinitely more calls. There's a missing heading. Oh, there it is, emails. And 130% more emails. Just a dramatic difference. And so when I'm saying non-automated, what I'm saying is this is a person who, as you can see with the low performers, these are, by the way, touches per closed deal. So as you can see with the low performers, what they're doing is they're having a bunch of meetings. They're kind of seeing who kind of like comes through the funnel. And, they're not following up. They're not saying, hey, let's book another meeting tomorrow to like hey, let's get your significant on the line. They're part of the decision-making process. Let's get them on tomorrow. And, I'm going to give you a one-off phone call to see, if, hey, by the way, you didn't show up, or hey, I'm just checking in. It's Friday. You said we're going to be having the conversation with your wife tomorrow. Like, do you have time? Do you have any questions before you do that? Like, this is the difference maker. 3x higher the close rate. I mean, just think about that from an impact on, again, we could call it your investment, whether it's resources or time, whether it's you're grinding it out, kind of like posting on LinkedIn, or you're spending money on ads. Like a 3x higher conversion just because a rep is more attentive, or you are, is significant. It is significant for your ability to fund your deals on kind of lower volume if you can't generate higher volume, and it's significant impact on your costs if you are trying to drive higher volume. So I guess the point here in the net, and I don't want to kind of like belabor it, but I think that there's an impulse in the industry to say like, hey, if we just get our automations right, if we just get our story right, if we just incorporate AI enough, like this problem will be solved for us. I do not see it happening. Not right now. Like, it's still a people business. We need to develop relationships. We need to make connections. Your LPs are out there grinding to make money. They're kind of expecting equal effort on the side of the LP, and that the LPs that are the performers that are actually getting checks closed are putting the effort in. So, last piece. Just good. I have 5 minutes. Building trust at scale. So we're talking primarily, like my experience primarily is driving high volume strategies, right? Digital marketing. Most of you probably raised, the initial money you raised was from people you knew or people who knew people you knew, right? The trust transfers onto them. It's a lot different to get a check from someone who just got introduced by their grandfather than it is to get from someone who has never heard of you and just clicked on an ad 2 days ago, or saw your LinkedIn post and thought it was interesting, downloaded your ebook, right? Those are totally different. And so how do we, as we're trying to scale up, think about getting, kind of developing that trust quotient as we move people through the funnel? And so there's a few things. We were talking, the next stat, again, make sure it's there. We were interviewing IR associates specifically in operators who were driving a high volume lead strategy and really trying to accelerate their capital raise, and asking them questions about, what did they need? Unsolicited, 60% of IR reps said, hey, we need more social proof, right? Their words. And social proof is kind of a concept that I think is very new to the industry. Like you kind of know the trust is not new, but social proof, at least the type that we need in order to make sure conversion is tight down funnel, is a little bit different than what we're used to. Now, I say reference calls here. You've seen here are 3 examples of things you can do for reference calls. Obviously, there's reviews, testimonials, reference calls. You can put them on your website. Reference calls are hard to do at scale. I don't recommend trying. But capturing testimonials, making sure that there is a human element so that when you or one of your representatives is talking to people about all the great things you do, there's something to back it up that's not you. Obviously, there's multiple platforms here that have reviews enabled on them. We think third party is good, but it doesn't really matter where they are as long as there's something that you or your reps can point to. Say, don't take it from me, take it from them. Next thing, education at scale. So I would go back to the undulations page, but I don't know how to use that clicker this well as you've seen. So education at scale. You're bringing in a new lead. Obviously, everybody's trying to do education. What we have seen is that the vast majority of Generative customers, and Generative's the largest accredited investor lead gen agency in the country, almost all Generative customers that run 2 webinars per month are under 3% cost of capital as a function of ad spend, right? And that's kind of the 3% cost of capital as a function of ad spend is kind of like the North Star. You want to stay under it. What we've seen, and some of them are well below that, what we've seen is that if you run 1 deal-based and 1 general value webinar a month, which is a lot, but bear with me, it gives the new people who are in your ecosystem who maybe have just talked to you or one of your representatives an opportunity to say, hey, like, there's something more here. Like, these people actually know what they're talking about. They're not just trying to like get me into the fund. They're adding value. It answers questions at scale, right? So especially if you're just transitioning from maybe like a GP-led process to an IR-led process, there can be some hiccups there. And so how do you give people exposure to the GP consistently without having them on every call? That's what webinars are good for. They need to be consistent. They need to be informative and value added. And it also creates, very importantly, natural next steps in the sales process. Hey, this has been a great conversation. Hey, one of the things we can do is we have a webinar coming up actually on this deal in 5 days. Can I sign you up? So keeps them engaged for the long run. Lastly, and this one kind of is table stakes, but transparency and access. If in your sales process, whoever's doing it, in your capital raising process, whoever's doing it needs to, leadership engagement can be done via webinars, as I mentioned, or sometimes loop them in. But you need to have enablement materials prepared. We hear reps all the time talking about, hey, people are asking for sample statements, sample investor updates. I don't have them. So that stuff needs to be kind of on, like, in the enablement package. Having them able to answer questions, like very quickly and easily be able to answer questions about skin in the game, showing examples of progress updates. These are all really important. So, I've got 47 seconds. Getting IR execution right is the difference. Bar none. We can, again, there are any number of ways to drive leads. You need to scale up your capital raising process. You think leads are the problem. That's as simple as writing a check to someone. The rest of it's just hard work. And so putting attention and investment into getting to leads quickly, defining your process and knowing what you're going to do to execute on those leads effectively, driving engagement all the way through the funnel and making sure you're measuring that. That's what the process is for. And then building trust with those LPs is going to be the difference between funded deals and coming up short. So, thank you.